Hey everyone, it is Julie here with TipRanks, and today we're taking a look at 3 unanimous strong buy stocks priced under $20 a share. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at 3 stocks that are all priced under $20 per share and have all buy ratings from Wall Street analysts. Now we found today's stocks using the TipRanks Stock Screener, and not only did we look for a strong buy, but we looked for a strong buy from best analysts as well. So we have some 4 and 5 star ratings on there. We're going to take a look at these companies, what it is that they do, and of course what those analysts are predicting for the stock's future. Just keep in mind that there can be some more volatility with some of these cheaper priced smaller cap stocks, so make sure you're always sticking to your own investment plan, understand your risk tolerance and time frame. Now let's get right into our cheap unanimous strong buy stocks. Kicking things off, we have a company called Mitek Systems. Their stock trades under the ticker MITK, currently priced just shy of $13 per share. Overall, in the past year, their stock has seen growth of 29% and has climbed 19% in the last 3 months. Mitek Systems engages in the innovation of mobile capture and digital verification identity solutions. With their intuitive technologies and patented solutions, they help bridge the physical and digital world. They're a leader in identity verification, including facial biometrics, image capture technology, and ID card verification, helping enable customers to confidently onboard users, verify identities within seconds, and strengthen security against cyber crimes. Now, the company did have some delays in starting their year-end audit, so some of their financial reports are a bit behind. The last earnings report came out near the end of October, where we did see an earnings beat. Mitek reported earnings per share of 14 cents, beating expectations of 10 cents per share, and revenue increased 10% year over year to $43.1 million. Management did reiterate their 2023 fiscal year guidance and said that their third quarter results put them back on track to meet their full-year revenue guidance of 18% growth year over year. About a month ago, Northland did name Mitek Systems as a top pick for 2024. Citing the belief that the company is well-positioned to see continued performance in both mobile ID and mobile deposit, check fraud defender, and strong liquidity. While preliminary Q4 results were in line and the 10K is going to be a little late, the firm does believe that Mitek can take advantage of tailwinds in each vertical going forward. More recently, just a couple of weeks ago, we had a 5-star analyst from Jefferies increase their price target on the stock. They said that there should be no surprises given that the Q4 results were pre-announced last quarter and preliminary 2024 guidance was provided, though the firm does see some debate around Q1 revenues and calls out a wide range of expectations around adjusted earnings. As I gave away at the start, all of our stocks today have unanimous buy ratings. Mitek Systems currently has 6 analysts weighing in on the stock. And their average price target comes in at $17.80, which would be an upside potential of 39% from current prices. Down below here, we can see our most recent rating from Jefferies is our low-end price target with an upside just shy of 10%, and on the high end, we have another one back in December with an upside of 80%. The second stock we're taking a look at is called Alphatec Holdings. Their stock trades under the ticker ATEC, currently priced at $16.58 per share. Overall, in the past year, they are up 28%, as they did hit a low here going into the winter, bottoming out near the end of October here, but they've been climbing impressively since, growing 81% in the last 3 months. Alphatec Holdings is the company behind ATEC Spine, which focuses on spinal fusion technology solutions. More than a medical technology company, they are focused on revolutionizing the approach to spine surgery. They offer products and solutions for the treatment of spinal disorders, offering intraoperative information and neuromonitoring technologies, access systems, interbody implants, fixation systems, and various biologics offerings. They'll be sharing their year-end and Q4 earnings results in about a month's time on February 27th. This follows their last quarter near the start of November, where they did report some mixed results. For their third quarter, they reported a loss per share of 14 cents, which was 5 cents wider than analysts had been anticipating. But on the revenue side, things came out ahead of expectations at $118 million, seeing growth of 32%. The company said that they are pleased with their achievements and even more excited about what's ahead for ATEC. Back in December, Alphatec was named as a top pick for 2024 by Needham. They said that market growth across the MedTech sector is expected to return to normal pre-COVID levels in 2024, and the firm believes that shares of companies that can show consistent above-market growth will outperform. We also had a top analyst from Piper Sandler recently increase their price target. They said that while they anticipate some concern around the political backdrop here in the US, they doubt MedTech will be pressured regardless of who wins the presidency. However, volumes and pricing for 2024 should be good across the sector. Alphatec Holdings comes in as a unanimous strong buy with 8 current ratings. And an average price target of $22.31 would be an upside potential of 34% from current prices. Looking at our list down below, on the low end we do have a rating from Morgan Stanley with an upside of just 2%, and on the high end we have Lake Street here with a very bullish price target and an upside of 92%. And our third stock today, we're moving across the pond to a company called Nomad Foods. They trade under the ticker NOMD and are priced just above $18 per share. Now they're fairly flat over the past year, up just 2% after having a decline going into October and climbing recently, up 31% in the last 3 months. Based out of the United Kingdom, Nomad Foods manufactures and sells frozen food products. They are the largest frozen food company in Europe, where they're the proud owners of a portfolio of leading niche brands, including Birdseye, Findus, and Igloo. They manufacture, sell, and distribute a range of branded frozen products across 13 European countries, with the UK, Italy, Germany, Sweden, and France being their 5 largest markets. Their next earnings report is less than a month away on February 22nd and follows an earnings beat back near the start of November. And there were a few highlights from that Q3 report. Not only did their earnings per share of 47 cents come in 5 cents ahead of expectations, the company also announced that their revenue grew slightly to 764 million euros, and they also raised their full-year earnings per share guidance. On top of that, they announced a new share repurchase program and their intention to launch a quarterly dividend early in 2024. And that they did. In fact, just today, literally a few hours ago, the company announced that they're initiating a dividend of 15 cents per share. That initial dividend will be payable on February 26th to shareholders of record as of February 9th. Management noted that the initiation of this quarterly dividend marks a notable milestone for Nomad Foods. The action is a testament to the quality and resilience of their business and their confidence in their ability to generate significant cash flows and sustainable long-term growth. A couple of months ago, we did hear some commentary from a Jefferies analyst who had reiterated their buy rating on Nomad Foods. The analyst said that they expect to see volume growth in the first and second quarters of this next year, boosted by decreasing cost and strategic pricing, in turn positively impacting the gross margin. They also view the company's buyback activity coupled with the new dividend as an attractive feature. The stock currently has 5 buy ratings from Wall Street. And those unanimous buys come with an average price target of $22.75 for an upside potential of 25%. Down below, our most recent rating here in January comes from Barclays with an upside of 10% and is actually our low-end price target. On the high end, we have BTIG back in November with an upside of nearly 38%. So there we have 3 stocks, all priced under $20 per share and with unanimous buy ratings from Wall Street analysts. Let me know your thoughts on these companies in the comments down below and which one maybe catches your eye the most. I always appreciate hearing from you guys. Like I said at the start, some of these cheaper stocks can be a bit more volatile. These videos are never a suggestion to buy or sell any specific stock. Make sure you're always sticking to your own investment plan and do your own research and due diligence. Thank you so much for watching. Have a great day, and I'll see you back here next time.